I want to talk to you about earnings season coming up. We're hitting on some of these stocks that are well off of their highs. How important is earnings season, not only for the market, but specifically for tech? Facts set out with a report saying when you look at 5 of the Mag 7 stocks, their earnings year over year is supposed to be more than 60% higher. If you look at the rest of the S&P, 495, actually an earnings decline by 6%. So just lay it out for us.
Yeah, I think what we saw over the last week, we had a couple of bellwethers reporting, Taiwan Semi reported, Netflix reported. And I think what we saw was that or estimates pretty much got ahead of themselves. Well, not so much estimates, I should say, but more so expectations. The estimates largely came in line, if not slightly better in many of those cases. But at the end of the day, it was a sell the news kind of situation, which showed that a lot of what we've seen actually as of late has been more multiple expansion driven and less so higher estimate revision driven, which means that, which poses the question if that trend is sustainable. Now, the one good thing I would say is that I think we had such a huge reset of expectations on Friday, where basically the floor fell out from under us, that that does pose possibly a better omen for this coming week with 4 of the Mag 7 reporting.
Okay. So you're saying a lot of this is due to multiple expansion. We're in a higher for longer environment right now. We just hit on where the 10-year is trading at about 4.6%. So one thing, though, I thought these Mag 7 stocks, they were supposed to be kind of resistant, if not completely immune to this higher for longer environment because they have such strong cash balances. Why are we seeing those stocks under pressure right now?
Yeah, I mean, just take Netflix, for example. You had the multiple go from about 4 to 5 times sales to about 8 times sales over this period. Now, they have been raising estimates, but at the same time, the multiple has been expanding at just as fast as a rate, if not faster. So we've come into a position where the estimates and the expectations had gotten slightly ahead of themselves, where people presume that those earnings beats could be maintained at those previous rates. That being said, that does not appear to be the case, because now we're on the other side of the mean reversion, where those healthy growth numbers, those insanely aggressive growth numbers that we've seen over the last couple of quarters are starting to come down. Then you add the geopolitical overhang and you add the Fed overhang with the higher for longer. That's not a good recipe for,
Okay. So you're saying it's valuation in a much more volatile environment than we had at the start of the year and a lot less certainty about those rate cuts. You put it all together, it's a big issue for these tech stocks. I was speaking to a managing director of an investment bank recently here in Europe. They said that clients, they're not selling off their tech positions, but they are nibbling at more cyclical sectors like industrials and even non-cyclical sectors like healthcare. Are you seeing a similar interest that people, they don't want to get out of tech, but they want to kind of broaden their exposure?
Yeah, I think you have to be in tech. There's the tech is the future. AI is coming. The productivity boom is coming, and there's nothing to stop this. So you have to be there. Now, at the same time, do you carry the same kind of weights that you used to? No. I mean, we've been cutting our positions in our top weights, whether it be NVIDIA, Microsoft, Meta. We've been cutting all those systematically over the last month and moving into things like utilities, like gold, like aerospace and defense, just because of all the things that we just talked about. So we've been trimming.
Are you making
positions.
Big bets, or like this managing director told me, are you just nibbling?
I mean, 3 to 5% of our portfolio is in each of those new buckets. So it's not tiny, but it's not massive.
Understood. James, stick with us. We got a lot more to talk to you about in just a second, but we're going to stick with tech right now. And that new bill to potentially ban TikTok right here in the U.S., the measure clearing the House over the weekend, raising the pressure on the company's owner, ByteDance. Our Emily Wilkins joins us now with what's next for that legislation. Emily, good morning.
Good morning, Frank. Well, yeah, the huge package passed the House this weekend. It included that $95 billion foreign aid bill for Ukraine and Israel and the Indo-Pacific. And attached to that was that measure that could lead to TikTok being banned in the U.S. Now, the entire bill now goes to the Senate, which is expected to pass the measure. They've already approved a lot of the foreign aid funding. And under the bill, TikTok would be forced to divest from parent company ByteDance in as little as 9 months, although it could be up to a year if the president provides an extension. Now, the House has now twice overwhelmingly voted for TikTok to divest, and the latest version of the bill has the support from a key senator, Maria Cantwell, the chair of the committee overseeing TikTok. TikTok has lobbied against the legislation, of course, spending over $4.5 million in advertisements opposing the bill in recent months, according to data from Ad Impact. CEO Shouzi Chu also said that the company will exercise their legal rights, and some lawmakers like Congressman Ro Khanna think they have a good case to make. Here's what he said on ABC's This Week.
I don't think it's going to pass First Amendment scrutiny because I think there are less restrictive alternatives. We could have made it a crime to transfer Americans' data to an adversarial foreign nation or foreign state interference. But to just ban 170 million Americans who are engaged in speech and livelihood.
A TikTok spokesperson said in a statement that the bill would, quote, trample the free speech rights of 170 million Americans, devastate 7 million businesses, and shutter a platform that contributes $24 billion to the U.S. economy annually. The Senate is scheduled to vote on Tuesday, and Frank, we, of course, will be keeping a very close eye on how that's panning out.
Right. So, Emily, stick with us. I want to go back to James Cakmak. James, I want to get your reaction to the House passing a possible TikTok ban. I mean, how do you view this? What does it mean for the broader tech sector? What does this mean for TikTok?
Well, I mean, if it happens, obviously it's great for all the advertising platforms here domiciled in the United States. But I honestly don't think that they're going to ban it outright. I think that if it does, come to fruition, what they're trying to accomplish with this ban, with ultimately a forced sale in the best case scenario, then, some entity will likely buy it. I highly doubt that you're going to see one of the mega platforms buy it. So, I'm not too worried about it. And I think that competition will likely continue for the Metas and Alphabets of the world.
All right. So, Emily, just back over to you. Odds of passage in the Senate, any sense of how realistic it is for this bill to pass?
I mean, at this point, it does look like it's pretty good. I mean, it's hard to say. Of course, there is some opposition, some senators who, like Congressman Khanna, have serious concerns about First Amendment rights, have concerns about this being a slippery slope. But the really sort of drumbeat that we've seen throughout Congress is that there are issues with TikTok being connected to parent company ByteDance. You've heard a lot of lawmakers say, look, TikTok is fine. We want TikTok to stay. We just need to make sure that that tie between TikTok and the CCP is completely severed. And so that's what they've really been pushing for there. It has bipartisan support. The fact that Maria Cantwell, she, initially got the House bill and she's like, all right, we might make some changes. We need to look into things. For her to come out last week and say, okay, the House has amended the bill. They've made the divestment time longer. And now I approve it. I think that was a huge step forward in actually getting this bill done.